Good afternoon and welcome to Asking for a Trend. I'm Myles Udland, filling in for Josh Lipton. For the next half hour, we're breaking down the trends of today that'll move stocks next week. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we'll be diving into. Wall Street ending the week on a high note, stocks in record territory after President Trump and China's Xi Jinping have a seemingly productive call on Friday morning. The market liked what it heard, and all major indexes closed higher and at records on the session. A C-suite shakeup at Opendoor may have sparked a rally, but will that be sustainable? We'll talk about the hottest meme trade in the market right now. And could there be an open door for new home buyers in a post-Fed rate cut market? We'll tell you everything you need to know about the state of the housing market today. The CFO of Opendoor is departing, the company naming Christy Schwartz as interim CFO, effective at the end of the month. Schwartz has spent more than 8 years as the company's chief accounting officer, also serving as interim CFO in 2022. That was for nearly 2 years. Now, Opendoor, a lot more than the fundamental story. It's the latest meme stock to go crazy in this market. Went from trading below $1 back in mid-July and on Friday settling just under $10 a share. Joining me now to talk all things Opendoor and the state of the meme rally is Luke Kawa. He is the markets editor at Sherwood News. Luke, great to see you. Let's just start with the Opendoor story, and you've been covering this fairly aggressively. I'm curious what you make of the fundamental story at the company right now, which all kind of began with like, hey, it's $1. Hey, maybe it should be 10. Now we're almost at 10, and what the fundamentals are behind that. And maybe we can get into some of the meme stuff later.
So I think it's interesting in terms of the fundamental turn that you've seen in terms of the housing market. You do see some green shoots and things like mortgage applications recently and things of that nature. For Opendoor, a lot of the move or the expected turn in the housing market and housing activity has taken place well ahead of a change in fundamentals. In fact, in its second quarter earnings, it was able to book some positive EBITDA. Revenues came in a little higher than expected, but they did say the third quarter would come in a fair bit worse than analysts at the time had expected. So really the big catalyst for the stock has been the expected change in the fundamentals that the retail crowd very much hopes will happen under this new leadership, which includes a couple of the old co-founders and Shopify's old COO, Kaz Netjatian. So it's really a story much more of the fundamentals that people are willing to dream on, given the opportunities in the housing market, more than it is something that has fundamentally positively turned. If you look at EV to sales ratios, it's pretty much a fair bit ahead of Compass. I think you can argue that arguably Opendoor has more leverage to a positive turn in the housing market than Compass, but this is not a move that has happened yet on fundamentals. It's based a lot on expected improvements in the fundamentals.
Yeah, so let's talk about the expectations and the folks who have them. You had a great story this morning on Sherwood, talking to a number of retail shareholders, individuals who own the stock, and kind of the story they're seeing. And I'm curious, from your perspective, now as a journalist, previously in money management, just the role that these things play within the market and how quickly it feels like you can get a large group behind an idea and they now have enough sway to actually see this thing through. It's just not a silly part of the market anymore. It's a real factor in kind of driving the daily flow and the daily, thought around where are we at, much more broadly than a name like Opendoor.
For instance, Goldman Sachs basket of the stocks that retail traders own the most, it's up over 13% in the past 10 days. It's on a 10-day winning streak for its first time ever. So this is not simply an Opendoor story. But Opendoor, what I think is very unique about it is the extent to which these flows have changed the fundamental picture. I don't think you get Shopify COO jumping back over in the event that you don't get a big increase in the stock price. I don't think you get the co-founders coming back to play a more active role on the board of directors unless you have that interest. So in talking with a lot of the retail investors, one thing that's really, really struck out is transparency, open communication. The fact is that the shareholders that have been aggressively buying Opendoor down when it was at 50 cents, $1, $4, what they've been asking for, they have pretty much completely got. They didn't want the old CEO in. She's since resigned. They wanted Keith Raboy in particular back on the board, one of the co-founders. He's come back. They wanted an end to the 10B, kind of the automated selling programs that insiders had. Those have been taken out. So now it's like you have convinced and you have acted upon the wishes of the people who had the most passion and who were in at the ground floor. You've won them over, and they've been showing that they're willing to buy more on these positive catalysts. Now the question is, you still have to convince the rest of the world, and you have to do that both through putting it up quarter after quarter and by kind of showing some more headway in taking on what I would call, the three spreads that Opendoor has to kind of attack. That's the spread between what they're going to buy homes at, what they're going to sell homes at, the spread of what they're effectively getting by trying to cut agents out of the equation, capturing that spread. And if they move kind of more into the mortgage financing space, well, that's the spread between what they're lending and what they're borrowing at.
And moving maybe a little bit away just from Opendoor specifically, I'm curious what you make of the meme stock, that presence in the market today. I mean, you mentioned Goldman Sachs has a basket that tracks it. It seems to me it's just a more serious part of the conversation, and that these things do stand for something other than, like a lark. Like it's not, there's a lot of real money that is chasing these ideas, whether it is the playbook that Eric Jackson is running or just this notion that you can get enough capital behind enough ideas around certain stories that you can create a real trade out of it. What do you make of the meme rally, the meme presence in the market? It just doesn't feel like it's going away. And how much of a sentiment barometer, let's say, sentiment barometer is it that you look at when you're thinking about markets on a day-to-day, week-to-week basis?
So I see really two things at play here. First is that I would emphasize when you think retail investor, you think someone perhaps with a limited net worth sitting behind or like making a trade or two in their brokerage account. Pretty much all of the folks I talk to who are very actively involved in Opendoor, they are accredited investors by any other name. If they wanted to flip the switch, they qualify based on net worth, based on income. So these are real people with a lot of money. So I think that's one thing first that we should perhaps re-clarify how we think about retail investors when a lot of this is really kind of more akin to high net worth investors moving markets. So that's a starter. The second, I think you really, really cannot overplay enough the role of weekly options in the market in terms of being able to influence, drive, and precipitate bigger moves in stocks. So, for instance, a lot of the folks I talk to, they straight own the stock. They like the stock. But when the stock is getting a positive catalyst and it's going up, what you are really also seeing is, in addition to active buying of just the underlying stock, you see very, very aggressive buying of near and out of the money call options with an expiry at the end of that Friday. That has in itself a kind of positive reinforcement effect in terms of what it creates in terms of demand for the stock. So what I see in this is yes, we now know by virtue of market structure that there are ways to have very strong, nearly self-sustaining moves up to a point. You kind of need more volumes and more interest to keep it going, absent positive turns in the fundamentals. But we know that this happens. I know that market makers are certainly aware of it in terms of how spreads have changed, even since the initial kind of GameStop 2021 episode there. So it's a feature of markets. And for me, it tells me that people are a lot more active in the stock market, and they're using it not only to kind of bet on turnaround stories through just owning the stock, they're also using it as a speculative device in terms of short-term gains, and that is pursued aggressively in the options market.
All right, we'll go really, really deep on market structure next time. Luke, appreciate the time. Have a great weekend.
Always a pleasure.
President Trump touting progress following his call with Chinese President Xi Jinping. For a closer look at U.S. and China talks, we caught up with Eurasia Group founder and president Ian Bremmer during Yahoo Finance's Market Catalysts.
There is a desire to engage in serious negotiations because if you're doing a summit meeting, you want to have something that you're going to be able to announce. And so no one was expecting any breakthroughs on any of this, but it's very different. I mean, you couldn't have a more different dynamic from where we were in the weeks after Liberation Day. The United States and China had essentially imposed trade boycotts on each other. And we're also looking at a significant decoupling in the near term. That is not where we are right now at all.
Well, so where are we exactly? And will the result of where we are be better than where we were pre-Liberation Day in the prior tariff regime?
I think it'll be more stable. So in that regard, it'll be more predictable. And, in the pre-Liberation Day run-up, it wasn't. People were expecting that there were going to be, sort of big hits that the Americans were prepared to take, or else to lots of other economies. And of course, Trump has been, quite hawkish on China in his first term, as was Biden. There's now a shift. We are very close to announcing the details of what this TikTok deal is going to look like. That wouldn't happen unless there was a summit meeting where the Chinese and the Americans are exchanging levels of confidence that they are going to improve their relations. The United States recently reduced some of the expectations for a defense aid to Taiwan, making the Chinese quite happy about that. There's been a lot of talk about restrictions from China on the precursor chemicals for fentanyl export. And those chemicals are needed. So it means a much better capacity for the Chinese to know which customers they're going to and restrict other sales. If that happens, that's going to be a fairly significant piece of the tariffs that come off from the United States. So all of those things are in train. But that's very different from saying that China suddenly is going to trust the United States. No, those summit meetings you saw with the Shanghai Cooperation Organization, as well as then with Putin and Kim Jong-un, that's where China's heading. It's building an alternative where they're telling countries around the world, you can't trust the Americans, they're unreliable. You can trust us, work more with us. So clearly, long term, this is going to be about more decoupling and more fragmentation in what had been a more globalized environment.
Well, I'm curious how that message is being received, because on the flip side, we had President Trump meeting with Keir Starmer in the UK, quite a greeting there in terms of pomp and circumstance. Yeah. So how much is, for lack of a better word, how much is Trump winning in this court of opinion around the globe?
He's the most powerful leader right out there, in the sense that, he can't get everything done, but he has incredible loyalty, and the U.S. is the most powerful country. But that doesn't mean people like him. The United Kingdom is legitimately very friendly in their disposition. Remember, Biden and Obama personally didn't really like the UK. Trump does. He likes the royalty. He owns the golf course. He really does quite like it there. And he was really looking forward to how historic this trip was and all the pomp. And as you say, so that's real. But when you talk to other leaders around the world, not many of them want to have fights with the United States, but almost none of them, have a level of trust for the U.S. and the U.S. president. And so there is a problem that the United States is no longer really thinking about the long term, that the U.S. is undermining its relations with other countries and making them want to hedge away from the U.S. long term. No conflict near term, unless you're China or a country, or Russia, a country that feels like they have the cards and can stand up to Trump and stand up to the Americans. Most countries can't stand up to the Americans, but they don't want to be in a position where they have to have this vulnerability in the future, and that bodes badly for the U.S.
Ian, as you know, the UN General Assembly set to begin Monday. World leaders will be gathering here in New York City. UN Secretary General Antonio Guterres has urged world leaders to, quote, get serious and deliver, highlighting things like peace, climate, responsible innovation, gender equality, development financing, UN reform as central themes of the week. None of those things, I think it's safe to say, are the priorities of President Trump. He will be addressing the UNGA. So given those dynamics you were just talking about, how does that play out next week? What do we need to be watching for?
Well, I spoke at length with Antonio on Monday. He's a good friend. And we were talking about these themes and the reality that the G7 is not united in their support for rule of law, multilateralism, and the UN. the BRICS are not united in coordinating policy in creating an alternative. But if the United States and the G7 don't stand up together, that the alternative is going to be other countries will have much more influence, most notably China.
All right, stick around. Much more on Asking for a Trend still to come. All right, well, the Fed's September rate cut and 5 straight weeks of mortgage rate declines are giving buyers a little more breathing room, but affordability remains at its worst levels in decades, with high prices, taxes, and insurance still weighing on the U.S. housing market. For more, we're bringing in Jenna Stauffer, Global Real Estate Advisor at Sotheby's International. So Jenna, I know one rate cut won't fix everything for the housing market, but are you starting to see, as rates have come down in September, have you started to see signs of buyers getting a little more comfortable, being a little more willing to step in after things were really frozen there for about 18 months or so?
They absolutely were frozen for about 18 months or so. And look, the housing market is so sensitive to any interest rate changes. So when you do see interest rates go down, you do see purchase applications pick up, you see activity pick up. So we have seen some buyers come off the sidelines. It was nice seeing mortgage rates come down. Now that we do have a rate cut, we don't know exactly what's going to happen with mortgage rates, but I do expect mortgage rates to continue to ease. It might not be in a straight line. It's going to be really dependent on data that we get and if economic conditions can really align.
Now, the sticker price on the house is one thing. When you talk to prospective buyers, are things like the rising costs of home insurance, particularly in markets like Florida, are these things becoming more prominent in those conversations? Because it seems like for a long time, it's like, well, okay, house costs X, mortgages Y, I can or cannot afford that. But these other pieces of the puzzle now seem to be playing a larger factor in the caution we've heard from a lot of buyers.
Absolutely. So it's what I call this lethal combination. This lethal combination has really been holding so many buyers back from being able to get into the housing market. And what's in this lethal combination? It's, of course, the high home prices relative to income level. It's the elevated interest rates. It's rising maintenance costs. It's rising insurance. It's rising taxes. Look, affordability is a big issue. It's really this choke point that we just continue to hit. So it's not really one factor more than the other. It's the combination of all these factors.
I think a lot of the conversation we have around the housing market is around the challenges for buyers. I'm curious your view on the challenges for sellers. Are you hearing from folks who don't want to be in the market because they want a certain number, they don't think they can get it, they don't want to have their home sit? Like, what's the seller mindset in this environment as well? Because I think when both sides of the equation don't feel great, it feeds on itself. And that's, I think, why we've seen conditions in the housing market be so challenged for so long.
Absolutely. There's been this mismatch of expectations and reality. And you do have sellers that are discouraged with this housing market. It's been a tough pill for some to swallow. They're not seeing in some markets the price increases, these rapid price increases that they had been getting used to. So they're having to adjust to the market. And for some sellers, they're in a position where they don't have to sell. So they are pulling their listing. You're seeing delistings really pick up. That is a big thing. We have seen an increase in inventory this year. So that's been putting this downward pressure on price growth. Prices have gone up tremendously. So even when we see this deceleration in price growth, homeowners are still sitting pretty. They're sitting on record equity, but in their mind, they're still back in these 2021, 2022, and they're not really in line with current market conditions.
Yeah, and I see it in my neighborhood. No one wants to be the home with the for sale sign sitting for months and months and months and months. They just want to move it off. Jenna Stauffer with Sotheby's International Real Estate. Really appreciate the time.
Thank you.
All right, and that's a wrap on today's Asking for a Trend. Be sure to come back here Monday afternoon, 4:30 p.m. Eastern for all the latest market moving stories affecting your wallet. Have a great weekend.